Hey everybody, how are you this morning? September 10th, 2020. One more day till the weekend. 2 more days till the weekend. 2 more trading days, of course. Hope you guys had a great Wednesday night. I was busy working, tearing apart the markets, looking at charts, doing all those things that I love to do. Also doing some chores around the house, but I can digress and get out in the weeds. Somebody give me a double knock. Let me know. Sound and video. There we go. Look at everybody coming in. Somebody screaming at me from up north there. You know who you are. Anyhow, let's cover what we're going to cover today because I've got a lot to go through. No jacket and tie. No jacket and tie today. No, I'm actually a little crumply because I've been up since 4:30 this morning tearing apart the markets, looking at everything. Futures have been bouncing around. Got the NASDAQ coming back up a little bit here. AstraZeneca making some headlines. Obviously, you've got some earnings that are going to drive things as well. If we look at right now, what's going on with the NASDAQ? There's some implications or what's going to happen over the next 4 weeks here. I'm going to go into that. I talked about it with my night trader people last night or yesterday, and I think it's just some information you need to know. Also, want to look at some earnings here. We had RH, it used to be the old Restoration Hardware, just knocked it out of the park. But more importantly, I always tell you guys about the Telsey Advisory Group. Dana Telsey's the person that runs that research group. They upgraded the stock today. They know their retail stuff. The stock is up 15%. I think it also helps to play out some strength in the home builders that we've already been looking at. Home Depot is one of the stocks we're going to look at in just a little while here. Also, we're going to look at GameStop falling on their face. Can you imagine why, though? Everybody's buying stuff online and we're all stuck at home anyway. So, I'm going to look at some of your bad echo. I'm going to look at some of your comments here. Make sure I've got the webcam setting on the right microphone. And it looks as though I do here, but I'm going to double check just to make sure. And we're going to save that. All right. So, everybody, Jerry, love the nice move in Datadog. And as you know, I love the name too. Mongo database, Datadog, Slack, yada, yada, yada. All these names are good. Datadog, I do love the move in Datadog yesterday. Also, you look at the move in Zoom. Awesome. 11% up day. Stocks up 2% this morning. A lot of these high flyers are getting reinflated just as quickly as we saw them drop. Tesla eased back. Jerry, I think you were right on that one. Shouldn't be using your name, but you know who you are if you were right on that one. When we look at it, Tesla eased back. There was some selling that went into the close on Tesla. Still looks like a great bouncing opportunity. Let's look at a couple of the slides and get right into it because I want to cover a bunch of charts today. I've got my list here, and since I've been up since 4:30, it is growing longer. We're going to talk about the overnight developments as always, and a couple of headline trades, including GameStop. What does yesterday's move in the cubes mean? We talked about the move before I did the study that I did yesterday, and that's what I shared with my night trader people on the live or 11 o'clock live stream. Love doing that live stream. Great ideas. We talk about some data. Data drives a market, and in this case, this is exactly what I nailed down yesterday. We're going to talk about the results from my quick study I did. I'm also going to review because this is very important. I want all of you to, I can do it. I can do it. DraftKings, it's going up. You know why? Look at what happened with Penn Gaming. They get an upgrade. I mean, I've been all over the news this morning. Penn got an upgrade, and here for a second. Investors versus traders during the correction. We did this yesterday. I want to make certain that we go over this because it's very important, especially in the wake of that study that I did. We're going to look at some tradable headlines, and then we're going to talk about your biggest questions. I did open up the Q&A area, and I see that we've already got a question in there. I'm going to hit those and then I'll come back to the chat as I always do. But the question and answer area is going to get the preference here if you want to get in first. All appears quiet on the eastern coast. That's a lame reference to the Western Front there. I had to read it. I think it was in 8th grade when I read the book. But it is quiet. We've had mixed futures all evening. Everything was down. We saw at one point S&P 500 futures trading down 2%, and then they bounced higher. NASDAQ doing what it has done the last 6 months. It's leading everybody higher this morning. I looked at the QQQ on the real time here, and we were up about 30 basis points or so a little while ago. Companies like Zoom right now is up about 0.5%. Actually, you've got now cubes are up 82 basis points, so almost 1% after the jobs report came out in line. That was some of the data that we got hit this morning with. But AstraZeneca, among the more active in trading this morning, the company's up more than 1%. As they clarify what's going on with the trial patient, that patient that got ill. Remember, this was one person. A lot of people freaked out. I actually don't like the way I reacted, but I do like the way I reacted when I talked about the people that started selling the stock on Tuesday night, and that was the suckers trade, jumping out when it's down 8 or 10% or 12% after hours because of a headline that passed that said one person had, this is standard operating procedure. I'm glad that you guys sit and listen and watch and let markets digest things, because now AstraZeneca's back up yesterday, finishing flat, now up 1.2%. This is going to be the lead horse in the race as we turn that final corner towards a home stretch here in the search for a vaccine. Another interesting thing, we're putting a lot of weight in the vaccine here. Really interesting story I saw last night, and I'm not sure where I was watching it, to be honest with you, but they were talking about the polls that are out there that are saying there are only 21% of the people out there that are going to immediately take the vaccine. Something like 39% of the people are saying they might wait 6 months, and then the rest said, no way, I'm out. Think about the effect here. We're all waiting for this vaccine because it's the cure-all. All of a sudden, it's going to be the thing that releases us and allows us to get back to doing things normally. It may not play out exactly that. I'm not saying that this is one of those things where you be a nervous Nelly about it. It's just something that the market needs to price in and discount. And I think you're seeing that because headlines now are starting to have less of an effect from the coronavirus on stocks. So that's good news because we get back to start looking at data, which is obviously right in our wheelhouse here. So AstraZeneca, we'll look at that. Traders using today as a confirmation day, which is clearly in the futures activity. NASDAQ was the leader yesterday. We're seeing the NASDAQ be the leader in the futures. Traders are going to watch today along with the volume today. Those are the two things that you want to watch if you're watching along me. Over my shoulder, I'm going to be watching the volume on the cubes, the spiders, the IWM, making sure that we don't have a day where it's just a vacuum. Nobody's trading, even if it goes up 5%. I don't care. If the volume's light, it means that nobody's got confidence. It means they're just dating the market if volume is light. I want to see the market get married to traders for the next 4 weeks. I know that's short term, but I want to see the market get married. I want to see them get together instead of trading, and that's what the confirmation day is all about. Earnings analyst activity is also quiet today. You've got some companies coming out after the close today, though. You've got some good numbers. Oracle's coming out. Peloton's coming out. We're going to have some good earnings to trade off tomorrow, and it's going to be a Friday. So I'm looking forward to giving you a little bit of that information. Leading the market, that's going to take momentum from yesterday. And again, this goes back to it being confirmation day. The unemployment number came in at 884,000. We were expecting 850, so slightly less. So that is a number that actually is what's given us a little bit of bump here as we move a little closer to the open. Here's your chart. S&P 500. I remember the first day we started doing this and I said, we're going to look at this chart every day, and we have. We just missed a correction. The S&P 500 pulled back over 7%, didn't touch its 50-day moving average. This is another indication of the cubes being in the leadership. The NASDAQ, they are the new blue chip. How about Honeywell getting back in the Dow? That's big news. Anyhow, you've got the S&P 500 stopped out at its 20-day yesterday. We're now off that oversold. I think we move above the 20-day moving average. The traders trend line on heavy volume, it's going to give us a poke back up to a possibility of 3,500 in the next 4 or 5 days. And then I think we see that 3,575 that'll play out at some point. That's given the confirmation. FuelCell missed this morning, guy. FuelCell missed this morning. Stock's down 5%. We're going to hit it. I've got the chart for you. I'm all over you. I got the chart. So when we look at this S&P 500 20-day, the real activity, not in the VIX right now. We did move below the 30, which is what I was looking for yesterday. Remember, the VIX always knocks twice. That was the first knock. We pull back to 27, 26 or so. That's when it's time to go long volatility with the VXX or a VIX call. You have to pick them carefully. You have to pick your timeline carefully, because there's a couple people on this chat will tell you the time premium goes away quickly on the VIX. You have to get it right, and that's why I didn't pull the trigger here. We wouldn't have gotten what I needed out of that move, even though it was from 26 up to 38 in 2 days. You would have had to catch everything the way the premiums were priced into the options on this one. It's making more sense to let it come back down, because the next spike takes us to 42 or maybe even 45, 42 or 45. So where's the real activity? It's in the cubes. What does yesterday's move in the cubes mean for the market and the outlook for the next few weeks? This is where you get down to the study. Oh, I'm sorry. I wanted to hit this very quickly, the 10% days. This quick review. I'm sorry, guys. And let's actually just talk. I can do this from memory. We're going to go back to the slide on the cubes. What does the move in the cubes mean for the market? So let me go back to this slide of the NASDAQ 100, or I'll just pull it up on the old e-signal here, because I like this charting anyway. You guys can see it. So here's your NASDAQ 100, and we had a 10% correction that touched, unlike the S&P 500, touched down on the 50-day on Tuesday and then sprung us back higher. We didn't get oversold, but look at the volume that came along this. We had buyers coming in yesterday. Nice volume. I want to see more volume like this today. But this 10% correction is the magic thing. Yesterday, I looked at this and I tore it apart and said, since 2000, how many times? This was my question I asked. 10.85% to the close. Top of the bar, 11.11. I like 11.11 because it's lucky, right? So if you look at this, how many times since 2000 has the market pulled back by 10% in 5 days? In 5 days, because this was in short order. And obviously we did it back in March when we were whipping around and absolutely going crazy. We saw volatility. But how many times does this happen, and what's the result? Well, answer is 86. And when you look at it, the results are that the S&P 500 and the NASDAQ are trading higher a month later. Significantly higher. It gets back that 10% plus another 2 or 3%. Now, you may say, well, that just gets you back up to break even. Guys, if you can figure out when you're going to see a 12% move in the market, think about last month, we see a 9% move. We see 8% move a couple months before that. If you can harness a 12% move and you can target where it's happening, and we can do it with the cubes right now, you can absolutely clean up. So we saw a 3% move higher yesterday. It takes the probability that we're going to see that 12% move up to 80%, just above 80%. So, have fun at the dentist, Jerry. Sorry about your luck. I've spent enough time with them in the last couple of months here. I'm done for another 3 or 4 months. So have fun though. Anyhow, if you can pinpoint this, that 12% gives you an advantage. We're at over 80% chance that we're going to see that 12%, as long as we get the confirmation move above the 20-day moving average, which is what I want to see today. And we're off to a good start. We're off to a good start. So that is what I wanted to talk about, the cubes and why the cubes are yesterday's move in the cubes means and what it means. 10% down in 5 days, the market, as long as we see that bounce up 3% higher on the next day, and we were right there. I'm squinting when I look at 2.9% yesterday. You get the 12% move. So confirmation day today gives us that boost. That leads me to my review. Real quickly, and I'll only go over this for a second here. I just wanted to remind you, I actually went over this with Nicole yesterday. I hope you guys got to catch my TD Ameritrade interview. I was wearing a shirt and tie, by the way, when I did that. But anyhow, I went over this real quickly, and she loved this idea because you had some stocks like the stock that we talked about yesterday, Tesla, that was an opportunity for traders and investors. If you're a long-term investor, follow those simple rules. 50-day moving average trend should be going up if you're buying into the stock. 200-day should be holding as support. I don't care if you're below the 50-day. You want to see the trend moving higher. And the stock is trading above it or below its 20-month moving average. Bull bear market. Are you holding the stock for a 1-year minimum? If you are, dollar cost average. Tesla, as I told you, 440 I bought it, 400 I bought it, and the hair over 325 I bought it. That's how you get into your long-term trades during a big pullback like this. I want to hold Tesla for more than a year, so that's why I did it. Traders, on the other hand, are going to look at 3 things, maybe 4, and you can squint a little bit here because it's a faster moving market. I want to see the 50-day moving average. It's trending higher, but I want to see it stay above, the stock stay above. That's the added catalyst. 20-day moving average, I want to see that either holding or trending higher. It's going to confirm, and then look for that RSI that's not overbought. So a lot of these companies during the pullback, Procter & Gamble is one that comes to my mind. You look at it and it's still very high on the RSI. But if I get a 5% pullback in Procter & Gamble, I usually like to add a little bit to my position. Oversold is even better. You get an RSI down below 30, you want to jump on that. 40 is my threshold, and 45 I'll squint during a market like this. And I want to see volume buying on the reversal, both directions, both selling, getting out, and buying, getting in. I've got a link to the interview here. I'll open up my Outlook and pull that up for you. You're going to have to look at Outlook for a second as we do that, but we're friends. So there is that picture of the cubes here. My target right now with all of this looking back, you know, where does this leave us? If you're a trader looking at this last bounce, you're looking at that 50-day bounce, heavier volume. It's a trader's buy on the NASDAQ 100 and the companies that are trading the high flyers. You can name them with me. It's NVIDIA, it's Zoom, it's Tesla, it's Amazon, it's Shopify, it's Apple, it's Fastly, it's DocuSign. I love DocuSign right now. But you look at this, and it's a situation where these stocks are going to be the leadership as the cubes make their way up to 290, which is going to be the first testing point. You're going to look at that with me, and we're both going to say, okay, this is a point where we may want to take a little bit down off of the table if we've got some quick winners here. The market is still a little frothy. Here's that link. Market is still a little bit frothy, but we've knocked enough off that I think we make it up to 290 easily and probably even poke up at 300 again. But remember, volatility, September, and it also leads to October, which is the market bottom month. That's where we usually see market bottoms. So you want to watch for that bottom or that volatility to lead to another double knock of the VIX, buying opportunities. Let's jump into the trading activity and what we can do today. This AstraZeneca Moderna horse race yesterday, Moderna was getting some strength because AstraZeneca, seriously, this is like watching, and I didn't watch the Derby because it's weird for me to watch it in September. You know, that's especially since it's just 100 miles south of here. But if you watch it, this is really like a horse race, like watching the Derby. These two are going back and forth. Moderna picks up a bit after they got a downgrade yesterday because AstraZeneca has to put a halt on the study. Bottom line is AstraZeneca is up 1.2% today before we trade because they basically came out and clarified what the situation is with this one patient and that it is not the illness that they thought it was. So AstraZeneca is going to be back on course here. Take out the 50-day within the next week or two, and I think we make our way back up to 58. Again, looking for a headline trade to actually get out of our call in the night trader service with, you know, a 50%, maybe 60% gain. We've got plenty of time because we're in a January option. We played this correctly. RH used to be Restoration Hardware. I don't know why they think RH sounds better. They beat by 156. They beat on revenues, reported core demand growth of 47% in August and 44% for September to date. This number was really, really good. This was a great number from RH. I love the fact that they sold off before. As you know, you sell off, a little bit of a sell the rumor, and you got pulled down by the market. It was up 2.93 ahead of the number yesterday. The stock is up 17.5%, trading at 377.08 right now. How do you play this? How do you play this? This is going to be an interesting one. So right now, you don't buy this stock at 370. We're going to see some air come out of it. It comes back to 350, and that's where I like the stock in terms of a buy. You're going to see some heavy volume today trading, but you're going to see with all the headlines that we have seen, the stock is going to make its way back down to the 350 mark. And I think this is a good buy because they're going to have a good quarter next quarter. The other way that you play this is Home Depot, because RH just told you that the demand for their products is good because people are still working on houses. We've seen strong demand, those housing, the mortgage application numbers that we saw yesterday, that we know that housing is going to continue to go up. Home Depot is part of that retail sector that is still on fire. It's been a leader. It's gone to sleep here as we've seen some questions, people taking some profits here. Volume's been heavy, but the stock came down, tested that 50-day. Home Depot is where you look. It is a situation where this stock is going to take out 300 over the next probably 4 to 6 weeks or so. That gives you a nice little run from its 10, 11, 12% on my quick math from right now from its move. It got a 3% blow yesterday. It passes above the 20-day today. I think you see 300 on Home Depot. Lowe's is the other one. I like Home Depot a little more over Lowe's in this situation. They've been actually executing about the same, but Home Depot tends to stay a little more as a leadership role in the group. So that's how you play the RH trade. Don't buy it at 277. You let it come down to 250. I like the stock for the next couple of months. And you can play that trade back up to probably a 280 or so. And then you also look at Home Depot or look at some of the other ones. FastSol is one of the companies that are still, these home stocks are still tearing it up, or actually I should say building it up. GameStop misses by 26 cents. Come on, folks. So everybody knows that we're getting ready to sell a house, right? I'm in the process of selling a house. That's what I was doing actually last night until 9 o'clock, cleaning out the rest of the house we owned for 20 years, right? A lot of stuff in it. One of the things that got thrown out yesterday, were video game consoles. Video game consoles at one point was the thing that went to friends' houses and on vacations in cars. We had to buy adapters so that they could work on the headrest television so the kids could stay busy, right? Consoles are going out. PlayStations. I asked my son about the new Microsoft Xbox that's coming out, or the X, and he said, nah, it's no big deal. You know, we're doing everything online now. Everything's gaming. So bring that back around to this. How can you be surprised that GameStop's missing and they're not doing so well? On top of that, we're in the middle of a pandemic. Everybody's gaming. They just don't have a reason to go out to the GameStop, who's now trying to get into phone business, et cetera, et cetera. Look at the run up that we saw. I mean, this was a great move up to 850. If you played that to the bullish side, it was good. I love the fact that, don't get me wrong, the technicals, I look at this and I say, look at, wow, you got an opportunity now that this stock could probably trade down to 470. At the same time, if you look at this part of this, so you might want to say, hey, buy that dip at $4. Look at this stock bouncing around on the bottom. This is like dropping a bowling ball in the bottom of a pool at $4. This thing is going to sit there and just do nothing. So watch yourself on GameStop. It is not a stock that you want to step into. And honestly, I think this is one of those death blows. Probably going to take GameStop below the $4 level as we move our way into the holiday season and people realize that the stock is not going to be one that is going to be saved by the holiday shopping season. When I look at the stock right now, and I'm trying to pull up a very quick update for you on what the stock's trading at. So you're trading at $6.70 right now. It gives you a $2.70 move to the downside that I think is going to happen in a pretty brisk manner down to that $4 level. You're trading right up here ahead of the open here. I think you still got a nice play down to the $4 level. If I am looking at this, and this is not a recommendation, this is, as I always put it, this is just a side trade. I tell my 11 o'clock night trade group that this is a side trade. You look at the $6 put in January maybe on this stock and say, hey, this is one where it's going to travel down below. You don't try to play it down to the 4 and make a home run, you know, $1,000 return on it going down to $3 by January. You play the 6 or the 5 and you let this thing continue to go down, which is where it's going to go. You can see it traded down to 250 in April. That's because of the itis and it was taking us. But look, The stock even then didn't bounce higher, even though people are buying video games, etc. The video console gods are not mad because they were PS3s and PS whatevers. They weren't the Atari 2600s and the Bally systems and all that stuff, which I think I still have at my parents' house, which they still have the house I grew up with, which I don't know which is more shocking, the fact that I have the video game consoles from my childhood, or that they're still in a house that they've been in for 50 some years. Anyhow, let's get back to the charts here. So GameStop, you got a little bit of a side trade opportunity there, looking at the short until January or so. I just don't see this stock. And now, as I promised, FuelCell misses a report. Third quarter, they come in a penny less than the Capital IQ consensus. Revenues were down 17.6% on a year-over-year basis. You know what, folks? I'm not going to pull an Alfred E. Newman and say, what me worry, and throw my hands up. The stock is one, and right now we're trading at about 248 pre-market. So it's going to pull down. We've been in this trading range already for the last couple of days after we pulled back below the 50-day. I look at this as a trading opportunity to get into FuelCell, and all disclosure out there. Not only do I hold full FuelCell in our alternative energy, but it is one of the companies that I have in one of my long-term personal portfolios. So it is a personal holding. I'm pulling for the home team. The stock was up 4.5% yesterday. I was rooting. Going to be down to 250. I'm not going to be buying back on that. I moved down to $2 where the 200-day moving average would get me dollar cost averaging into a stock like this. 50 days still going higher. This is going to be an opportunity to buy the stock on a bounce lower. Maybe we hit this 240 or so, and then we bounce back up to the 340, 350 area again. So this is a wash, rinse, repeat cycle that we've seen. Love the sawtooth here. I was out. I bought in when I got around 270 or so. Hold the position right now, and I'm going to continue to hold. I think this is one of those where you see the stock bounce up because the group is good. We've seen other companies in the group that have missed by a penny and have had earnings that have been lower. So take that as you will. Alternative energy did awesome yesterday. When we look at the numbers, they're going to do well today. Let's see if we can see any pre-market quotes here yet. Nope, nothing really on Tesla, Workhorse, all of those. Workhorse put up another 11% yesterday. That stock is doing exactly its namesake. It is a workhorse. 24 bucks is the level that I start to like putting a little tighter stop in. I think we can run to 26 on this, and that's where the stops are probably going to get engaged. But right now, that sawtooth method's got you holding this until 26. Look at this. We've got email connections going over. I look over and people passing emails back and forth. So I don't think I'm having bandwidth problems. We should be okay. All good again. All right, guys, I hope so. Let me go to the Q&A. We've got about 12 minutes. I'm going to hit some of these questions, and then we're going to knock it over to some just ad hoc random charts here as we make our way towards the open. Zillow versus Redfin. Redfin's my number one here. I like both of the stocks. As you know, there's a trio in this group. Rocket, RKT, didn't rocket the way I thought it would yesterday. Taking a sip of coffee here, just a second. You can see the 20-day is finally getting calculated because we've got a month worth of activity since the IPO. This is this level right here, 24, we've talked about, where the stock's consolidating because we've seen this little, the first initial bounce came right back, and we got a little bit of a hesitation. Whenever you see a company that's IPOing, everybody's going to look at these gaps and start to say, well, these are points where you're going to see a consolidation. So I'm not afraid right now with Rocket. It's kind of hanging out at 24. We're going to see the mortgages continue to come in. I think the stock does make its way up to 32. And I think it's a great pairing. Again, I'm their stock sommelier here when I say this is a great pairing with Zillow Group, which is popping above the 20-day moving average. And it also goes well with Redfin, RDFN. Redfin had a great day yesterday, really great day. I can mention that we got into a long position on Redfin in the night trader portfolio. I won't give out the exact position because that's what the night trader people are there for. They're the details and how we're going to make money, and why I chose Redfin over Zillow, because I did make a choice of one over the other. I still have a list right now that is long and distinguished, Zoom being one of them that's at the top right now. Let me pull up that chart. Zoom being one that's at the top. Zoom's going to get ready to take off again. This is just stock, folks. This is one of those that take note of the activity that you saw in Zoom, because if you remember, like I do, they blew their number out here. They had a great quarter, blew it out. This is a sell the news action right here. That's all this was. Everybody took it out. And full disclosure, I have personal position in Zoom, but the stock is now blowing up, getting ready to go through 400. And I think this is the trip that takes it to 500, takes out that top. You saw tooth on this one, which is what you should have been doing the whole way. But Zoom has now got its Zoom back. You can see it went to sleep here for a little while. The stock's earnings report was just amazing. People shorted into that at the same time that the market was coming down, took some of the froth out of it. This stock is clearly going to make its way back up to that 480 level, which is where it traded after earnings. I love it when you get an opportunity to buy a stock that gets pulled down after the market by a sell the news, which is exactly what we saw. There's your buy the rumor. Everybody got a freaking break when it went up 30%, and now they sell out of it and the market gets weakness. Now you're going to realize that, oh yeah, the stock is worth $480 to $500 and it's going to make its way up there. I love Zoom. Is Baozun, B-A-Z-U-N, which is on one of my bullish lists. It is rolling over a little bit indeed. You can see the 20 and the 50 day, and that's why I know when you bring that up, the 20 and the 50 day, the $36, $37 level has kind of been that hold for this company and the trading range. Right now, that's why you can see it's going flat. The stock is currently rolling over. It's got to come up and start making a move to the upside here on that ADS, and I think it will. The problem is this is now turning into an established trading range, as so many of the stocks that we've seen here have. And I think you're going to find more people that are going to just trade it for this 38 to 45 move, which, you know what, if you look at that, that's 7 points. That's more than that 20%, 18% or so that you get out of that move. That's very tradable. And with this volume being as light as it is, it can be pushed around. So that is exactly why you're seeing people do exactly that. I think that's why you see it flat. I don't know if it's so bad that we have to call it a rollover yet. It's just turned more into a trading range. SD's asking, are my stock recommendations different for night trader and for strike price? Absolutely. They will be different. They will be different in frequencies. They'll be different in holding periods. There is a lot more variety here. When I go to the strike point method, I'm using in some case 6-month options, because this method that I use actually plays to my longer term. And if you look it up on tip ranks, Johnson Research Group is still in the top 1% for stock picking of the entire universe, Johnson Research Group being me. And the reason for that is because of this model and how I use the technicals to drive it and their long-term buys. So yeah, there's going to be a difference, and I love the fact it's going to be more like the fast money or the fast profits trades that we put out that are 6-month expiration options. So big difference between the two. Take a look at it. Selfless promotion here. You know, take a look at the service. I love it. I love the technicals. I also love the night trader service as well. But anyhow, and we're going to be doing some stocks and some more interesting things in the service in the strike point. So actually holding some stocks too, low dollar stocks, etc. What about the TQQQ? If you want to leverage this move, and as I said, if you're expecting a 12% move in the NASDAQ 100, which is what I'm expecting, the TQQ is one of those places where you want to be. It was up 8% at its high yesterday, and you can see obviously it bounced off. It trades in tandem for the most part with the cubes. So this is going to give you that extra boost, if you will. I said 290, which is going to be a 160 equivalent. That's a 20% move. If you get to the 290 on the cube, 290 on the cube is only going to give you about a 9% move. So you can see the doubling here, the power of that leverage that the TQQ gives. It's a little more aggressive. So the disclosure there is that this is something that's going to be a little more whippy. If the market goes down 10%, you're going to lose 20% on this, or actually more, because there's some future slippage involved in this. I like the TQQ, and I do own the TQQ. I like it as a leveraged play on the bounce or the rebound in the cubes. 75% of the population has to be immunized in order for the vaccine to be relatively effective. Jeffrey, I am not an immunologist. I'm not going to play one on TV or on live stream, but I absolutely have to agree with just the logic there. If we still have people walking around, 25% of the population, and the fact that you're wearing a tie, it looks like a tuxedo, makes me think I need to listen even more to what you're saying, but which makes me need to wear a tie at least tomorrow. But anyhow, I believe that to be true, and I believe that's one of the reasons that we're still underestimating the impact of what is going on with the coronavirus, or as I jokingly refer to it as the itis, for the next year or two. I don't think this is something that goes away as quickly as people think. How do I pick my support levels? It's a combination of a number of things: short interest, the amount of short interest on a stock. It's also the amount of volume that's trading, and obviously technicals. And then I also use a method that looks at open interest on widely traded stocks to find out if we are going to see support at certain levels, just because of delta hedges and those type of hedges that normally happen in the options market. So it gets a little more technical at that point. But that's actually one of my most effective, and I think somebody on here, you know who I'm talking about, ZB, likes the idea of that, and I hope he started looking at that as well. HD supply moves to 300 in about weeks, a 20. I'm trying to get the rest of this. Buying a call option gives me more leverage. Your comments, please. Yeah, sure. I mean, anytime you're buying, so you were playing in if then, you know, if yes, if you trade an option, correct, you are. There's also, and I will say the then or the if is a time premium. Remember what I always say, my rule about trading options and what I want to see. And this depends on usually the timeline that I'm looking at. But if I'm looking at something that's less than a month or two, I want to see FAR, F-A-R, fast, aggressive, right direction. That's how you trade the option, because that's what gets the premium on your side. You don't have time premium ticking away so quickly. Otherwise, depending upon the option, and what I'm trying to tell you is you have to pick the right option. Otherwise, the move isn't going to give you the leverage that you want. I've got an AstraZeneca January option right now that if AstraZeneca had jumped 30% in August, would have given me more return than it would if it jumps in October, because time premium's gone away. Convexity lowers because all of these things. My Camping World holdings, we have an October option and a September option. The October option is moving much faster right now because September option has time ticking away from it a little faster because September expiration is closer. Learn time premium, how theta affects your option selection. That's the number one thing that I can tell you that you need to look at. And then you look at delta and things like that, but theta is your biggest thing, because time's your enemy as an options trader. If you're a stock trader, you can sit and wait around for something to come back or make its move. If you're an options trader, it's a lease on the stock. It's a lease to purchase the stock. It is an agreement that you want to buy the stock, but it's not owning the stock. Zoom November call options at 55. Fair to say recent option prices are expensive? Absolutely, Doug. When you look at the implied volatility, I've got a VIX on all optionable companies, and the VIX on Zoom went through the roof, not only because of the move in earnings, and you've got people now saying that the company is back in that move where it can start jumping all over the place, but it's also a situation where you've got the options traders that are now pricing in, uncertainty in terms of what those moves can be. So yes, you're going to pay for it. Go back to what I just said. Time premium is the one thing that will help you to at least offset that. And obviously, you can go and do a vertical spread, call spread on that, and take down the price of the options as well as you want. You take part of the price out of it. Money Map Press. You guys are going too quickly. Maybe next time. Thought about offering an early bird price, lifetime members. What is that? Oh, ZB, you got to look at it. Nicola, let's look at it. It's coming back. I'm going to pick a couple. I'm over on the chat now. Pick a couple random. I told you Nicola is going to be a play it back down. It's going to come back after that. I think you get back down to 36 bucks and Nikola turns into another buying opportunity here. You know what? It had to fade simply because GM came out with the big news. So everybody jumps in, profit taking. How is that any different than Zoom, guys? I mean, that is the same situation that you see with Zoom. People take the profits and they're going to come right back in again. Didn't make it all the way back down to where it did, but Nikola, still love the company. Still, I do not own it right now myself. I will probably be looking at a position at it right now as it's trading towards its 20-day, moving up above. Big Satellite Beach, big cap J in Satellite Beach this week. Good. VIX on ZM is 77. My VIX is a little bit higher, but my VIX is calculated a little bit differently as well. I am looking up a little bit to find a couple of more charts. COF, Capital One Financial. I hate the financials. You know that. Zero volatility, flatlining stocks here. XLF. Oh, by the way, one of the things I did want to hit very quickly, and I'll do it in less than a minute. Redshaw's article on shorting the bond market. Love it. I think he's nailed it. The bond market is owned by the Fed already. And how do you, and also the Iron Mike reference in the article was just genius. And if you saw that fight as I did, the Holyfield, that was just tactical genius too. If you look at this TLT rolling over here, the bond market is owned by the Fed right now, and really, where's that going to take you anywhere? You know, you can start looking at the junk bonds, but really, it's a situation where you got to start looking at shorting the TLT, taking the other side of that trade that has worked out to the long side, and also, as I mentioned ad nauseum here, look at the short dollar. Short dollar still got its trend. We saw the euro and a couple of other currencies get some strength, but it got a nice trend here. Capital One Finance, I didn't finish that up. I got sidetracked because I was thinking about Shaw, who also looks good in a tuxedo. Right now, if you look at Capital One, tightening up band. It's not a pennant here because we're not getting lower highs and lower lows, but it's tightening up. The noose is tightening on the stock. I think this is going to be one where you see it move to the downside. The next break is to the downside, not the upside. 200 days going to continue to compress it. You know what? This is a stock where you can go and sell cover calls if you've got, and I'm just throwing out ideas. You could sell cover calls if you wanted to. If you want to own the stock, you can buy the put or sell the puts. What I'm saying is it doesn't look like it's going to go anywhere. So get premium wherever you can on the stock. That's how you're going to make the money. It pays a dividend yield of 0.5%. It's not going to give it to you there. And that 0.5% isn't going to be, it looks like that's probably the best performance you're going to get from Capital One. So watch Capital One. I think most of these XLF stocks, outside of a Wells Fargo and Morgan Stanley, which are at the extreme ends of the spectrum here. Look at the XLF doing the same squeeze play. Guys, this is a zero volatility, zero movement sector right now. I learned my lesson trying to short it a couple of months ago with the regionals, which are also doing the same thing. Stay away. As long as we've got Fed policy that's scrunching interest rates and taking away the spreads here from the banks, they're not going to make any moves. They're going to make money off of the trading desk, which is what Morgan Stanley did in the last quarter. And that's why they are trending, not falling down. All right, guys, that is it, except I am going to look at Ford for Sam because he pulled it up and I have been watching Ford. This is one that's just zero volatility. I've got a target of $6 on it, and that was a pre-earnings, which was way back here. I still like the stock to make that move. I just think it's, obviously you've got another zero volatility situation here. The only way that GM or Ford starts to make a move, and if you look at GM as a comparison, they hook up with Nikola. They start dating Nikola with 11% of the company, and look at what GM's been doing. And this is Nikola, but this is going to help their trend. Maybe Ford goes out and buys Workhorse, or something like that. Who knows? And I'm not suggesting that I know anything about that, but maybe Ford gets out there and, NIO or Ford's got to get a little more active. The pickup truck is not going to do it for them. All right. So that's it, guys. We're going to wrap it up. Remember, and we're looking at the NASDAQ already up 1%. 1% on the NASDAQ. Spider's up 60 basis points. IWM up 0.5%. Volume, you're going to watch volume. And you're going to watch for confirmation today. we get those, we're up for another 10% here over the next couple of weeks. You're going to trade it with me. Night trader people, I'm going to give you a couple of ideas here at 11 o'clock that we're going to use to